And following this, the federal law number 7 of 27 on tax procedures was introduced. So we are here to give the public announcement, public clarification, which was given by the FTA. Before the start of this session, I will welcome and I will request Mr. Kamar Malik, the president of Toastmasters Club, the president of our CPD committee. I will not say means a single word of him, mean what he has added for this the ICMAP UE branch council. The start of UE branch council in UAE and the registration of branch means an official representativeness of the ICMAP in Rasul Khaimah. Mr. Kamar has started a Toastmaster club with the name, let's say Toastmaster. Even I was thinking it's a like sandwich, which we have to eat it. But it was a club where the individuals were welcome and they were being trained to be a leader for tomorrow's. Mr. Kamar has started his Toastmaster Club in UAE with his presidencyship. He has trained so many people in UAE, and currently he has completed his tenure for the presidentialship, and he has handed over to another person, who is the another leader to lead the Toastmasters Club. Any activities in the UAE means on web, it's a webinar, it's a seminar, or any CPD activity. Mr. Kamar is the first. His name is everywhere on the top. The introducer, the initiator is Mr. Kamal Malik. Mr. Kamal Malik, the house is with you. Please give your remarks on it.
Well, thank you very much, Melissa, for a very warm introduction. Honestly, believe I don't deserve that much. This is just my humble contribution towards the profession and towards ICMA Pakistan. Anyway, thank you very much for your great words, kind words. You are always very kind. On behalf of UAE Branch Council, on behalf of ICMA Pakistan, I would like to welcome all the experts of today in UAE VAT. At the same time, I would like to welcome all the attendees of today's webinar. This webinar will definitely help all of us to learn about the UAE VAT and what are the new developments, what are the challenges we have in the UAE VAT, and how we can overcome these challenges, how we can equip ourselves better in a better way that we can work in a better environment in the market, and we can make a difference in the market through our expertise, through our tax expertise. And I'm thankful to Malik Khalid, who is our chairman of the Practice Development Committee. He has arranged some very seasoned panelists, and they are very expert in their field, and they are very professional, and they are making a difference in the field of UAE VAT in UAE. So their enriched experience will definitely help all of us to learn something new and to polish our existing knowledge, which we already have, and the knowledge which we don't have, we will get from their expertise. They will share their knowledge, they will share their experiences, they will share the solutions of our problems which we are facing in our daily routine life in UAE. And this is a great platform, and I believe that it will be a successful, and at the end of the day, we all will learn something new. I would like to welcome all our learned panelists, Mr. Arif, Mr. Nasser, and Ms. Rabia, and of course, Mr. Ali Baksh, and our moderator of today, Mr. Malik Khalid, and to all the audience, to all the members and students, those are joining from different part of the world. You all are welcome in this program, and hope we all will learn together. Thank you very much. Over to you, Mr. Malik Khalid Mahmood.
Thank you for your handy speech. Mr. Kamar is always our asset. Any webinar, I will again repeat, or any seminar, all the efforts of the chairman CPD committee, which is Kamar Malik, and without this, maybe we were not able to present even today the public clarifications on the VAT. So I will just give a brief overview on the VAT. What is VAT? VAT basically is a value added tax. It's the form of another sales tax, which is called a consumption tax. But VAT is levied at each and every stage of the supply chain. and ultimately is borne by the end consumer, not the supplier and not the distributor. VAT is a transaction-based indirect tax. I mean, there are two types of tax: direct and indirect. VAT is the form of indirect tax, which is levied in each and every stage of supply until the end consumer will bear it. End consumer generally bear the VAT cost while registered businesses, only the registered businesses, collects and account for the tax. And in a way, as a collector, I mean, the businesses are an agent of another tax authority. They collect the tax on behalf of the authority and pays to the government. VAT is in more than 180 countries around the world. So the United Arab Emirates was the member of the OECD countries. So they have also introduced VAT with effect from 1st January 2018. So when practicality came, so many questions came in how this VAT is applicable, and there are so many questions and ambiguities which through public clarifications FTA have introduced, and they cleared every stage of the ambiguity. So now we have speakers, public speakers from around the business community in UAE. They will present these clarifications, and I will ask them the questions for your help. If anyone have the questions, please raise it now. This is an interactive session. We can ask them questions in their speech, even the end of their speech. We can ask them end of our session as well. So at the first of the VAT clarification, which is B2B healthcare services. So B2B healthcare services, we have a expert from management consultancy firm. This is RF Cashflow Management Consultancy. The managing director of RF Cashflow Management Consultancy, Mr. Arif. Mr. Arif is not an expert of VAT. He is an experienced CFO who have served in several industries from energy sector, healthcare sector, construction sectors, and finally at end when he is established his own business as a management consultancy firm. So he started his career with the VAT industry, and right now he's serving so many industries in this country. So I will invite Mr. Arif Kechlio. He is a fellow member of the Institute of Chartered Accountants as well. So he will present us the public clarifications on the healthcare services, B2B healthcare services. The house is with you, Mr. Arif.
Assalamu alaikum ji. Khalid Sahab, thank you very much for your kind introduction. My name, as Ms. Khalid said, is Arif Kishlo. It's a pleasure to be here and to present this, my understanding of this clarification to everybody. So I'll just share my screen with you. I've prepared a small presentation. I'll go through the presentation, which I believe would be able to answer most of the questions that would have regarding this. And in case there are any further queries, Khalid Sahab or anybody else can ask at the end of the presentation. So ji, let me just share. The screen is visible, ji?
Yes.
Yes, it's visible.
Okay. This is VAT P016. Business to business suppliers of healthcare. This clarification was issued by FTA on the 24th of October 2019. Before we move ahead, I just this is a standard declaration disclaimer which is given by FTA, which basically clarifies certain aspects about the implementation of the federal laws for laws of VAT. And it does not seek to amend any provision of the aforementioned legislation, and neither it amends. So, so this means that the law was effective as per the date of its issuance, and there is nothing new which has come out. It's just a clarification which is needed regarding the practice of the law. Before we move ahead, we need to understand the terms. What do B2B or B2C stand for? So B2B stands for business to business, such as we give accountancy services to SMEs, consulting services to entrepreneurs, So we give softwares to restaurants, anything which a business provides to another business, whether it's a good, whether it's a service, it's called a B2B transaction. Similarly, B2C transaction means that like somebody, a business gives a facility for going into a hotel, or you provide them clothes, cars, any service, landscaping services, anything. So that means that a business is providing a service to a customer, a consumer. Okay. So with this, VAT, before we move ahead on the VAT on healthcare services, we need to understand what is healthcare service. So as per the Cabinet Decision 52, Article 41(1) basically defines healthcare services as being a service which is generally accepted in the medical profession. It is necessary for treatment of the recipient, and it includes preventive treatments, which means that even if there is something which saves you from a disease, saves you from an affliction, a prevention from that. Let's say you go for a test, and that test prevents you from encountering a potential problem. So that also is covered under healthcare services. So as per this is healthcare service. Now, as per VAT law, VAT is applicable on supply of identified goods and services. So, in this case, the supply is healthcare service. It is generally understood that healthcare services are zero rated. Okay, but the point is it so? We need to understand the applicability of the law on healthcare services. We discussed 41(1) here, where it defined healthcare services, but 41(2) of the same cabinet of the same decision also states that healthcare services shall be zero rated if and only if such services are identified or such services are provided by an entity which is licensed by the Ministry of Health or other competent authority, which may include a hospital, it may include a technician, health technician, dentist, pharmacy, anything. Okay, and the service is related to the well-being of a human being. So this is very, very important for us to understand, that it's not only that if somebody is providing a healthcare service, if a healthcare service is being provided to a human being, then that service would be zero rated. Okay. So as per law, it is clear that the recipient of the healthcare service has to be a patient, and only a patient will receive a zero rated healthcare service. I hope I'm clear on this. Where the recipient of the supply is not the patient, the service would be subject to VAT at the normal rates, which is 5% currently. However, the matter which requires clarification, that if a healthcare service provider delivers a healthcare service to another provider, what will be its impact? Is the business to business transaction eligible for zero rating or not? What happens if a business provides healthcare service to another business? So we can go through, we can achieve a better understanding of this as through examples, basically. So if a doctor, let's say, contracts with a hospital. Now here, generally there are two aspects here. Maybe a doctor is an employee of the hospital, so he already has a labor contract with that hospital. So that is a different type of contract. But then there is another doctor which visits the hospital. He has a service contract with the hospital, where it goes and sees the patient of a particular hospital and treats the patient at the hospital's premises. So that is a service contract. So what would be the VAT implication in that? Then let's say a hospital, which normally we all go to hospitals, to clinics, and we are referred to a laboratory for various tests or various sort of investigations. So what would happen if a hospital refers its patient to a laboratory? Or if, let's say, a hospital, is filled up, its operation theaters are filled up, it requires either a specialized procedure, or it just does not have capacity. So what it does is, like, you go to, let's say, modern hospital in near Satwa, and they say, okay, we don't have an OT right now, everything is sort of booked, so maybe we can refer you to a day surgical in Jumeirah, and you can go there and get the procedure done. It's a day care, within 18 hours you can come back and we can take it forward from there. So what will happen if a hospital contracts another hospital to provide a certain care for its patient? So taking up the first example, we say that a doctor has contracted a hospital to see that hospital's patients. So there are two supplies which are happening there. Number one is that the doctor is providing certain services to the hospital under his service contract. He is not under a labor contract, he's under a service contract. So he is an independent contractor working with the hospital. So even though his services are benefiting the patients and he's dealing with the well-being of a patient, but he is providing that service to the hospital and not to the patient. This is the main point here. The doctor is a professional. He's doing a business, like you are an accountant and you are providing certain service to another business. So it's the same thing, a professional business providing services to another business. So the contractual obligation of the doctor are towards the hospital and not to the patient. As a consequence, the services by the doctor cannot be zero rated. There has to be an implication of 5% VAT on the doctor, through the doctor to the hospital. The second supply is the hospital providing the healthcare service to a patient. Now that is a person, a human being receiving a service, a healthcare service as defined by the law, the Article 41, and therefore these have to be zero rated. Okay, so when a business provides another a healthcare service to another business, then it is subject to VAT. If it is being provided to a patient, a human being, it's not. Similarly, when a hospital refers a patient to a laboratory, there is only one supply. The patient enters into a direct agreement with the laboratory. It's not going, while it is being referred to by the doctor, but the patient has the right to go to any laboratory. So whenever he goes to a laboratory, so he enters into he goes, gives the referral, says, okay, fine, I need to get these tests done, these investigations done as determined by the doctor. So kindly do this. The patient makes a direct payment to the laboratory and not to the hospital. Okay. So even though that the hospital has referred it, the supply is being made directly by the laboratory to the patient. As a consequence, the services being provided by laboratory are healthcare services being provided to a patient. So these are going to be zero rated. And similarly, as per the third instance that I was discussing, that if a hospital provides a specialized procedure for another hospital, so what happens is, again, there are two supplies. The hospital, the specialist hospital is providing its service to a hospital. Since the recipient is not the patient, even though it benefits the patient, so this supply cannot be zero rated, VAT will be applicable on it. And while the hospital who was treating the patient initially, whenever it raises the bill on the patient, it will not charge any VAT on it, or rather I should say that the VAT charge would be on zero rate. So in summary, I would say that the supply of healthcare services may only be zero rated if the recipient of the supply is also the person receiving the treatment. In simple words, only a patient can receive zero rated supplies. So this is the end of my presentation, Ji. I hope it was clear enough. Khalid Sahab, if you have any questions, please let me know.
Thank you, Mr. Arif. I have several questions, so I will ask you. So actually, we are here to educate our community. Definitely, law they can also understand, and you have explained very well. So now I will ask you simple questions. Means for my understanding, and definitely my other brothers also will understand.
Marsab, can I disturb you, please?
Sure, sure.
Can we have a 5 minutes break for the prayer and then we will continue?
Sure.
I
sure,
think
sure.
that's important.
Okay.
Yeah.
Okay.
Okay. Thank
Okay,
you.
thank you, sir. Appreciate. So we will have 5 minutes break for prayer. Then we will continue again, please. Thank you for understanding, everyone.
Thank you, Chief.
Arif Saab, are you back?
Assalamu alaikum ji. I'm back.
Are you back? Huh?
And
Can we start, Mr. Kamran Malik? I think everybody is there. We should start now. Mr. Arif, I have some questions. Second, ICMA is asking, should we resume? I think session is resumed. Everybody is there. Okay, Mr. Arif, just for our general understanding, means about healthcare services, means the first question is, this is only clarification or it's an amendment to an existing law?
जी ये जो डिस्क्लेमर था मैंने शुरू में इसलिए पढ़ दिया था कि this was something which was purely a clarification. It does not amend and it does not seek to amend any laws. So this means that it was this understanding was there from day one, but practice में sometimes misunderstandings occur. So FT has only clarified this.
Thank you. Thank you. So we can understand here that there is no amendment on the existing law. This is only a clarification about the existed issued law. So another question is, if there is if there are healthcare employees like a doctor, he is working in hospital as an employee. So his relationship with the hospital and him will be as an employee, or they still will be as a contractor?
As he has a labor contract, he is an employee, so the implication will not be there. So he receives
he will receive his salary as a normal. Yeah. So he is not going to issue any invoice to the hospital. But in other case, if he is working as an employee in one hospital, and as the government allows, they can work in several hospitals. So if he is contracted by another hospital, so what will be the implication? This will be 5% VAT or it will be zero rated?
Again, previously, before the VAT law came in, doctors were working in various hospitals, and it was business as usual. But since the VAT law has come in, they have to, under the service contract, they have to issue an invoice, and that invoice, if they are, the prerequisite is that the doctor has to have his service income of more than 375,000. So if he has a service income of more than 375,000, he has to be registered with the VAT authorities. If he is registered with the VAT authorities and he provides that service, he has to issue a tax invoice. And if he issues a tax invoice, then he has to charge the 5% VAT.
5% VAT. And another hospital, the patient is going to the hospital. So in this clarification, the patient will be in all cases 0%, or he has to pay 5% VAT to the hospital?
No, absolutely. It would be 0%.
0%. Means in short, the patient is going to the hospital. Now hospital is referring to the laboratory, third-party laboratory, or he is referring to the other hospitals. The relationship between B2B is hospitals, the laboratories, and hospital to hospitals. But the patient with all these three is a C, mean he is for them as a customer. So patient don't have to pay any VAT as a 5%, he will be zero rated. So hospitals who are billing to other hospitals and laboratories, it will be 5%.
Yeah.
Okay. And there are some questions from the general public. They are saying, can you give examples of out of scope services in healthcare? Are there any out of scope services in healthcare?
Out of scope? Look,
what I understand, out of scope services are if we are performing these services out of the country.
No,
look, within the country, are there any out of scope services?
Not to my knowledge. Out of scope means that if VAT, if a business is providing a service to a business which is not inside the country, how can you provide a healthcare service if you're not in the country?
Let me add up here also. This out of scope service within a country, there is no out of scope services.
No, absolutely not. Look, if it is a B2B thing, even if it is a B2B thing, if you are providing medical equipment outside the country, well, it's a trading transaction. It's so normal, whatever the VAT laws that are
so it will be zero rated. Yeah.
That would be applied.
See, let me answer this question for your person. One of my friend asked this question. See, in the country, in United Arab Emirates, there are no out of scope services. Out of scope services, if they are performed out of country, from one country to another country, except UAE. In country, healthcare services either are zero rated or 5% VAT or exempt services.
Yep.
And another question is there, means one person is saying, they are getting medical insurance. They are in hotel industry. They are getting medical insurance for their staff from an insurance company. Will the insurance company will charge 5% VAT on their insurance premium?
The point is, I think so. There was a clarification some time ago. These insurances are subject; they are not part of the healthcare services.
Yes, so there will be 5% VAT on it, sir. Yeah. And another question, they are saying they have skipped some serial numbers. They have skipped some serial. Let's say, FTA have said the invoices will be in serial numbers. Some of the serial numbers are missed. So what is the way out of it?
What do?
As FTA said, the invoice numbers should be in serial numbers.
Yes.
If any of the serial numbers are missed, so what the way out? How they will handle this missed serial number?
Either
what I understand, the invoice numbers.
This was not part of this clarification, but yes. If I remember correctly, they will either have to issue a credit note against those invoices or determine that as cancelled invoices.
Yeah. Means but, the invoices either should be the missed number. Okay. the missed number should be either it's a cancelled invoice,
Yeah.
or make sure there should be no missed numbers. So we will do our practice that number should not be missed. It should be either a cancelled invoice or we have a proper justification why we have missed invoice.
Yes.
Thank you, Mr. Arif.
Yeah.
You have a very good presentation and very good explanation on this healthcare services or B2B. Now I will move to
It was a
Miss
pleasure to be
Rabia
here.
Arif. Miss Rabia Arif. Miss Rabia Arif is the CEO and the partner at RF Pechlio Management Consultancy. Before joining this consultancy services on VAT, she also served as a CFO in several industries, in sports, in healthcare services, in construction group. So Ms. Rabia Arif, the house is with you. She will explain us the public clarification on sole establishments. The house is with you, Ms. Rabia Arif.
Assalamualaikum. Thank
And
you, Mr. Khalid,
before
for
she
giving
starts, I will just explain. Rabia Arif is the fellow member of the Institute of Cost and Management Accountants of Pakistan. She is one of the female ambassador for the services, for the membership services of the institute. She is presenting as an ambassador. Ms. Rabia, house is with you.
Okay, thank you so much, Mr. Khalid, for giving us the opportunity to share our VAT knowledge with everybody. Before I start my presentation, I would like to add a few words to my introduction. First of all, Assalamu alaikum, everybody. And I'm Rabia Arif, and I'm a partner in Arif Kishnu Management Consultancy. It's a business advisory and consulting firm in Dubai. I have over 16 plus years of experience in accounting and finance, out of which 5 plus years of experience is in this consulting industry. Okay. During these 5-6 years, I have worked with some really cool clients, and it has given me the opportunity to learn about various facets of the businesses. And I have also learned how to run a business as an entrepreneur. So coming back to the topic, I have prepared a small presentation for better understanding of everybody. So let me share my screen with you. Okay, can you see my?
Yes, please.
Okay. My subject is VAT clarification on registration of sole establishments. Okay, this clarification was given by FTA in May 2021. This is the standard disclaimer of FTA, which states that these clarifications do not amend any VAT laws. So, what is this sole establishment? A sole establishment is a business entity which is 100% owned by a person, and that person is responsible for all the liabilities of that entity. And the sole establishments have no legal personality, which is independent or distinct from that owner. So therefore, it is considered to be the same person as its owner. Okay. Now the question is that is a one-person company, LLC company, or any other similar entities can be considered sole establishments? The answer is no. One-person company, LLCs, or any other such entities are not sole establishments, because they are distinct and separate legal persons from their owners. Okay. Now the question is, what is the purpose of these clarifications by FTA? A person can own a number of sole establishments. So there were doubts about whether the person should obtain a separate VAT registration certificates for each establishment, or all the establishments, sole establishments, should be included under one VAT registration. To clarify this, FTA has issued this public clarification. Okay. So what are the VAT registration obligations of sole establishments? Okay. As per VAT laws, one person can has only one VAT registration. Okay. And as I earlier said, that the sole establishment does not have a legal separate, a legal personality which is distinct from its owner. Therefore, all the sole establishments owned by a single person should have only one VAT registration. The law does not permit to register each sole establishment separately for VAT. Okay. Okay. Now the question is that who should take the VAT registration, the person or the sole establishment? Because all the establishments are in the name of a single person. So as per FTA, ideally the person should take the VAT registration in his own name. But at the same time, FTA allows the person who owns multiple sole establishments to take the VAT registration in one of its own sole establishments. Okay, so what is the mandatory threshold determination? How the mandatory threshold can be determined? Okay, if a person has multiple sole establishments, the taxable supplies of all the sole establishments should be considered collectively to assess the whether the VAT registration threshold determined by FTA has been exceeded or not. Okay. There were some instances where FTA has noted that the sole establishments owned by a single person have different VAT registrations. Okay, so therefore FTA has clarified this point, and it states that the VAT registrations in such cases should not be amended right now. Okay, and the person should wait for the FTA to notify them to take any corrective actions. So for the time being, no action is required by the owners of these establishments until and unless informed by FTA or notified by FTA. Okay, there are two different scenarios, and one is that that a person, owner or a sole establishment has not declared their taxable supplies. Okay, in that case, the owner or the sole establishment should inform FTA of any undeclared output tax by submitting a voluntary disclosure. As per the Article 10(1) of the federal law. Okay, if a person or a sole establishment has failed to register for FTA, and they thought that they have not considered the collective supplies, taxable supplies of all the establishments. In that case, they require to again notify FTA, and the corrective action must be taken to account for any outstanding VAT. So this was the end of my presentation. Mr. Khalid, if you have any questions.
Thank you, Ms. Rabia. Thank you for a very comprehensive clarification, comprehensive explanation issued by the FTA on sole establishment, legal and natural. So in a simple language, we can say the sole establishment, as explained by Rabia, it should be 100%. A natural person who is owning several entities in UAE and he is a single owner, I mean, he has sole establishment more than one. And
Yes.
if he wanted to register, means all the establishments law says no, he cannot register all the sole establishments. So it means he can register on his own name, or he can register his one entity to represent all of his sole establishments. So question is here, Ms. Rabia. I mean, one person have, let's say, 4 sole establishments.
Mhm.
Each of the sole establishment have turnover, let's say 40,000, 30,000, 70,000. So if it is crossing the basic registration threshold, that is 188,500. So
Mhm.
does he need to register, or we have to wait until each of his establishment should cross this voluntary threshold?
Okay, Mr. Khalid, there are two things. The mandatory threshold defined by FTA is 375,000 per annum. Okay, but if a person wants to voluntarily register for VAT, in that case, the threshold should be 187,500. Okay, if it is below that, the collective, I'm talking about the collective taxable supplies. Okay, if it is below 187,000, then in that case, they cannot even go for voluntary registration.
Thank you, Ms. Rabia. I have one question here. Means when we say the person has certain sole establishments and he can register on his own name,
Mm-hmm.
it means whatever he has expenditure or purchases on his own name, he can claim as an input.
Yes,
The input of his
because
organization and his will also be added there.
yeah, because as per FTA's definition, the basically the sole establishment has no separate legal personality. Okay, it is a part of the owner and the entity. They are same, and the person who has sole establishment, he is responsible for all the liabilities, and he is entitled to all the profits of the company. Okay, and in case of default, the personal assets of that person and his future incomes, they are at risk.
Thank you, Ms. Rabia, for clarifying this clarification. I have last question. Before this public clarifications, means nobody aware of this, they have to register each establishment separately, or they can combine on the single person name.
Mm-hmm.
What if the persons have registered each entity separately for tax purpose?
Mm-hmm.
Though they need to combine all these entities as a group, or they need to wait for FTA uh, announcement on this, or FTA they should contact them.
For the future registrations, the person should use only one VAT registration.
No,
Okay,
my question is for existing. Yeah.
yeah, I'm coming to that. For existing registrations, if the person has, let's say, 5 sole establishment, and he has taken 5 different VAT registrations for each establishment, then they should wait for the FTA to notify them for any corrective measures. So at this point of time, no action is required.
Thank you, Ms. Rabia, the ambassador, one of the female ambassador in UAE, representing the Institute of Cost and Management Accountants of Pakistan. Thank you for your valuable feedback on this public clarification on sole establishments.
Thank
Now
you so
I
much.
will move to one of our another expert panels, Mr. Ali Baks. Mr. Ali Baks is the Director of Taxation at Capital Round Accounting and VAT Consultancy. Mr. Ali is an experienced individual who is the fellow member of the Institute of Cost and Management Accountants of Pakistan. Before joining this consultancy firm, Mr. Ali has served as a finance manager in different companies, including one of the big giant Select Group. And right now he's an expert in taxation at Capital Round. Mr. Ali Baks will explain us today on the public clarification zero rating certain medical equipments. Zero rating certain medical equipments. Mr. Ali Box, the house is with you, please.
Thank you. Thank you very much, Mr. Khalid. Thank you very much for ICMA Pakistan and RAG branch of ICMA Pakistan for having me for this as a panel member of for this discussion of VAT and recent changes, means like a recent clarification by the FTA. So thank you very much. Before I am presenting my presentation, I would like to introduce myself a little bit. My name is, you told me, Ali Baksh. I am having about 25 years experience after qualification of ICMA Pakistan, and worked in various industries like a textile, real estate, and construction, and like investment sites as well. And recently I joined Capital Round Accounting and Bookkeeping as a partner. Capital Round Accounting and Bookkeeping mainly providing the consultancy for VAT, especially for the VAT and bookkeeping. We provide outsource accounting and bookkeeping services from means like a data entry till the CFO level. So we are in UAE. Yeah, so this is a little bit introduction of myself and my company. Now I'll share my presentation.
F5.
Is it visible to everybody?
F5. Press F5. F5.
Yeah, F5 I clicked.
Click on the presentation, then press F5.
Yeah.
Yes, thank you.
Now it's appearing visible.
Yes, yes, sir. Please start.
So today I'll present the recent VAT public clarification on zero rating certain medical equipment, which is released in 2020. So the decision of zero rating on certain medical equipments for personal protection announced through VAT public clarification 25, and this provision is temporary facility for the public of personal protection against the COVID-19 pandemic situation. This is specifically temporary for certain period. So it's not the permanent means change in the law or something. Provision effect on the supplies and supplies on import from 1st September 2020 to 31st December 2021. The provision applies on the following medical items: medical face masks that are not included in the cabinet decision number 56 of 2017, half filtered face mask, non-medical community face mask made from the textile, single-use gloves, and chemical disinfectant and antiseptics, which is other than the cosmetics, detergents, and personal care products. In respect of the supplies of medical equipment, supply can be zero rated where the date of supply takes place and the medical equipment is delivered to the recipient or placed at the recipient disposal in the period from 1st September 2020 to 31st December 2021. So first condition is here, the period should be like starting from 1st September till 31st December 2021. So if there is any means supplies or import in between this period, then this clarification will apply. In respect of import medical equipment, and import can be zero rated when the medical equipment is imported in the period from the same I said that this is the second condition for both supplies and for the imports. So that this clarification is a very period specific clarification. For reporting, if there is anything like any supplies or any import during this period, then the VAT registered person can disclose in their regular VAT return as per normal and mention that is a zero rated if its supplies are zero rated, and it's if it's imported with zero rated, they can mention it in the report as a zero rated. So this is all
Thank you, Mr. Ali.
from my side.
Thank you for clarifying us on certain medical equipment. So basically, you are saying that this clarification for 0% VAT on personal protective products. In personal protective products, they are limited as you name their names as well. So as you say that this clarification of 0% VAT is limited period, mean a temporary period. It's not a permanent. As you said that this 0% VAT is only from a period 1st September 2020 till the end of 31st December 2021. So anything means sold in this period will be treated as a 0%, not as a standard percent. So my question is, if the people have sold these personal protective products before this period, or if they will sell end of this period, will they charge will treat it as a 0%, or they will treat it as a standard rate?
No, if it's sold before this period, then it will be charged at a standard rate. And for future, there's no clarification yet. Means till now, the FT, as per this clarification, after that, after 21st, means like 31st December of 2020, it will be a standard charge.
Thank you, Mr. Ali. Another question is, what if the supplier have charged by mistake as a standard rate? They charge 5% VAT, and then later they come to know, no, this is coming under 0% rating. What they will do? And the customer have approached this supplier.
So if the customer approach the supplier can refund the customer, and he can issue a credit note against that supply as well. And that credit note can be disclosed in the recent VAT return as well.
Thank you. Thank you, Mr. Ali. Thank you, Mr. Ali, for your clarification on certain medical equipment. I hope it's clear for everyone. Now we will move to Mr. Nasser. Mr. Nasser is a partner at Bench Chartered Accountants. Mr. Nasser is serving this community from a couple of the years. He will explain us on one public clarification raised on adjustment on account of bad debts. Adjustment on account of bad debts. Mr. Nasser, the house is with you. We want your opinion on this public clarification.
Thank you, Mr. Kamar, and thank you to all the attendees, and especially to ICMA for having me here. And just before I start, I just want to introduce myself. I'm Nasser, partner at Bench Chartered Accountants, and I have 10 plus years of experience starting from Pakistan and in UAE since 2014, and my whole career spans around audit and tax and management consultancy. My topics for today are bad debt relief and time frame for input claim. So starting from the bad debt relief, first of all, I would like to explain what a bad debt is. This is a normal course it's a course of business that a person or a company, it allows a certain credit period to its customers. Like some give 30 days, 60 days, 90 days. This is normal course of business. Sometimes it happens that the customers, due to any reason, they do not pay. Either they don't pay the whole of the amount, or they don't pay any part of it. So the question arises, what happens in this scenario? First, the company has lost the consideration of the goods delivered, or whatever services they provided, they lost their consideration for that. And on top of that, when they issued the invoice for that, they charged a VAT, and they paid that VAT to the FTA. So now on both sides, the company is losing. So the question arises, what does FTA or the law say about that? So the law does take it into consideration this situation, and it does provide a relief on the situation of bad debts. However, there are certain conditions which must be met to claim this part of VAT which has been lost due to bad debt. So the conditions are that the supply should have been made, or the goods, if it is a service, the services should have been provided already, and the goods must have been delivered. Tax invoice should have been issued and VAT charged and reported in any relevant period. Whenever the tax invoice was issued, the related VAT should have been charged, reported to FTA, and should have been paid. Another condition is that 6 months must have been passed since the supply has been made. So during these 6 months, the company or the registrants should engage with the customer and try to get the payment. However, if 6 months have been passed, then this condition is met, and we can assess for our company for this bad debt relief. The next condition is amount or outstanding should be written off. So it cannot be that we can keep the invoice open in hopes that tomorrow maybe the customer they may pay. So we have to write off the invoice, either 100% or whatever part remaining. And then the next condition is that the write-off should be communicated to the customer as well. So the law doesn't say what means of communication should be used. It could be any communication by email, by letter, by post, or any means which is generally used by the company to communicate stuff to the customers. So once all these conditions are met, then the law says that yes, okay, so whatever part of the consideration which you have lost as a bad debt, then the relevant VAT you can claim back from FTA. Just giving an example, for example, the company, they issued an invoice on 1st of January 2021. The taxable amount was 10,000 and the charge of VAT of 5,000. Now, in the relevant the quarter, which was 1st of January to 31st of March, the company filed the return, they reported this 500 VAT and paid this to FTA. Now, a certain period has gone by, and almost in July, the customer has paid only half of it, 50% of it, but the rest of the customer says that I am not paying for any certain reason. Now, here the recoverable VAT is only part of the consideration which has been lost. The whole of 500, it cannot be claimed back because 50% of it is already received. The part which is not received, which is 5,250, the relevant VAT is 250. This part of this VAT can be recovered in the next VAT return, which will be filed. And this amount it is to be reported in a special box which is provided in while filing the return. This box is specially provided for these adjustments, and this only the VAT amount has to be reported here. The taxable amount is not to be reported, only the relevant VAT, which is 250 as per the example which I gave. It has to be reported, and a positive figure. Sometimes we think that, okay, we have to deduct this, so we put a negative figure. No, in this box is already negative, so we put the 250. This will be automatically deducted from the output VAT calculation in the return. Also, the point to be noted here is that the VAT has to be reported as per the emirate. So whatever emirate you are in, the place of establishment which you have, this VAT has to be segregated. If you have different establishment in different emirates, then it has to be reported as per the emirates wise. So this is all for my bad debt relief. Mr. Kamar, if you have any questions, you're most welcome.
Thank you, Mr. Nasser. My name is Malik, and thanks for your valuable feedback on this adjustment on account of bad debts issued by the FTA as a public certification. My question is, we are issuing sales invoices as an tax invoice. We have not received the payment. should we have to report as a sales, or we have to wait until the payment is received?
So, Mr. Malik, the law stipulates that the VAT, the tax is due on earlier of either the issue of tax invoice or issue of the supply made or the payment receipt of payment. So whatever happens earlier, tax is to be reported and paid to FTA as at that date. So if first the tax invoice is issued, irrespective of whether the customer has paid or not paid, either the customer has paid 50% or 100%, doesn't matter. The payment is totally irrelevant in this stage, and when the invoice has been issued, the tax has to be reported in the immediate VAT period and paid to the FTA.
Thank you. Thank you, Mr. Nasir. I have another question. Means we have issued the tax invoice. We receive, let's say, 5,250. We receive the 5,250. We have not yet received. How long we have to wait to declare as a bad debt?
So, Mr. Kamal, this scenario, again, we have to segregate this. So we have out of the 10,500, which is a total invoice amount, we have received 5,250. Then we again received 500. Now only the part which is bad debt is 250. The same scenario will apply to this condition. All these conditions will apply to this scenario as well. However, here the bad debt part is only 250. So now we'll segregate 250 into the VAT and into the taxable amount. And around whatever it is, I think so 12.5 or something, this is the VAT which can be reclaimed after lapse of 6 months.
The question is there any time limit for writing off the bad debts?
Sorry, I didn't get your question. Can you please repeat?
I mean, is there any time limit for writing off any bad debts?
Yes, Mr. Malik, yes. The 6 months, at least 6 months must have been passed since the supply has been made or the tax invoice has been made. There is 6 months period. At least 6 months should have been passed before we can write it off as bad debt and claim from the FTA.
Relating to your clarification, one question came from the public. If we agreed at a later stage, let's say today we have issued a tax invoice, after a few days, we agreed to give a discount as could not recover the amount from the customer, then still bad debts provision will be applicable, or we have to make another treatment for this?
Yes, Mr. Malik.
I will explain again. We have issued the tax invoice. We can say, let's say again, I will attach the same example, 5,250. We have received 5,000 dirham. And the customer, before receiving 5,000 dirham, our customer said, give this 250 as a discount. So the question is, this bad debt provision will apply, or we have to treat it to another way?
No, Mr. Kamal, but in this situation, bad debt provision will not apply because this is a normal course of business, and you have agreed with your customer to give them a discount. So this is in the normal course of business, and this is not a condition of bad debts. Bad debts is where you have not agreed to give customer any discount or any concessions. However, the customer is not agreeing on paying the amount which is outstanding on their side, and you have been chasing them for like 4 months, 5 months, 6 months. Still, they are not paying, and then even after 6 months, you obviously you are not agreeing on their conditions of not paying. Here, in this situation, only you can these bad debt provisions apply. If we have after a few days of issuing the invoice, we have mutually agreed with the customer that okay, we'll give you a discount on the certain amount, then this doesn't come under the bad debts, and this will be normal business credit note, and this will be dealt as a normal return.
Thank you, Mr. Nasir. As we understand, I hope the question is clear to the person who have asked this question. Regarding this discounts means for bad debts provisions, once you are making a bad debts provision, you have to issue a credit note to your customer, and the customer should acknowledge this, that you are writing off as a bad debts. If you are giving a discount to the customers, you have to issue a credit note to the customer. By reducing your invoice, you are issuing a credit note to the customer that we are giving you a discount on your invoice. Thank you, Mr.
That's
Nasser,
correct.
for explaining this.
Thank you so much.
One minute. Another question came from the public. Any minimum
Okay.
and maximum time limit for declaration of bad debts, please? I know you have
Mr.
explained
Malik,
already in your clarification that there is no limit on the bad debts relief, but please, can you explain in your own words?
I understand, and I can explain again that there is no, the law is silent on this. The law gives the conditions of claiming back or the relief conditions. However, it doesn't stipulate any amounts, minimum or maximum on this side. So this is completely an open field. So whatever the amount is, you can, if the conditions are met, then it can be claimed that as a relief.
Thank you, Mr. Nasser. Mr. Nasser is saying there is no limit on the bad debts amount. The bad debts is a relief which is not paid by your customer. Another question is saying instead of writing a bad debts, we can issue just a credit note. Yes, you can issue you have to issue a credit note. After that, means you can write off. Means you will issue the credit note and your customer will acknowledge, and then you can write off the bad debt note. Issuing of credit note is mandatory. Issuing of credit note is mandatory for writing of the bad debt, and it must need to be acknowledged by the customer. It must need to be acknowledged by the customer that you have written off as a bad debts. Thank you, Mr. Nasser, for your valuable feedback on adjustment on account of bad debts. Now,
Thank you so
again,
much.
we will move to our experts, Mr. Arif. Mr. Arif is the fellow member of the Institute of Chartered Accountants of Pakistan. He will explain us on the public clarification VAT-free special offers. VAT-free special offers is a public clarification issued by the FTA. Again, I will explain here and I will add up that there is no amendment in the existing law. There is no amendment in the existing law. This is a public clarifications to avoid and remove the confusions. Mr. Arif, he is a fellow member of the Institute of Chartered Accountants of Pakistan, and he is the managing director, Arif Cashew Management Consultancy. He is serving this community from couple of years. Mr. Arif, the house is with you, please.
Thank you very much, Khalisa. Once again, it's a pleasure. So I'm sharing my screen here again. Is the screen clear?
Yes, please.
Okay. Acha ji, Khalisa, we have already given the clarification that this is not an amendment, and this is just to provide certain clarifications on the implementation of the law. So first of all, before we move ahead, we need to understand what are VAT-free offers. So various retailers, especially, they are, especially during the previous year when the COVID was all the rage and everybody was facing pressures. So various promotions were being given. So one of the promotions was that the vendors were, the sellers were offering VAT-free special offers. Why they were doing this was to entice prospective buyers during a promotional period. As per VAT law, there cannot be any VAT offers. These promotions are misleading and contrary to the VAT legislations. Goods or services being offered are not actually supplied free of VAT. So by nature and implications, these are more like VAT on us offers, meaning that the VAT is paid to the government by the seller. So VAT is still applicable, but it is payable to the government by the seller, not by the customer. So it's more like VAT on us. So the clarification which is required here is that what is the obligation and treatment of VAT on sale of such promotional goods? So just for the sake of clarity, no, sorry, I think so. I pushed the wrong button. Sorry. Promotional goods are those goods which are sold as part of a special promotion. So there are certain obligations on the seller. The first one is by saying that something is VAT free, is misleading and it should not be mentioned as such. The seller again is obliged to impose VAT on these supplies. Because the VAT is always payable on taxable supplies and the seller cannot choose whether or not VAT should be imposed on a supply. So by saying that something is VAT free, basically a person is going into the ambit of the FTA or the cabinet and saying this thing is VAT free or not VAT free, so which is not correct. So as VAT on us is concerned, the seller can take a decision to sort of absorb the VAT on behalf of the customer. Such campaigns, as I mentioned previously, are mentioned as VAT on us promotions. So when the seller is granting such a facility, so it is essentially a discount on the promotional goods or services. So as per the VAT law, when a discount is offered, value of supply is reduced in proportion to the discount, which is as per decree Article 39 of the decree law. Okay. The value of discount is the amount by which the consideration is reduced. So this is as per Article 28(3) of the executive regulation. So by an example, let's say a motor car's normal price is 105,000 dirhams. So with a special promotion, it is rendered as 100,000 for the customer. Now the seller is getting a discount of 5,000, and that is the consideration that he has to pay to the seller. So again, another thing which needs to be clarified here is that the seller has to advertise its prices as to include VAT. So it is inherently said that if a motor vehicle is stated as being sold at 100,000, that 100,000 is VAT inclusive. So whatever the VAT impact on that particular sale is, the VAT is already part of it. And they can, even if they mention it in the advertisements, it does not make any item to be VAT free. So it is the responsibility on the business to determine the correct VAT payable to the government. Okay, and the customer will pay VAT inclusive consideration for promotional goods, regardless of whether the promotion is published as VAT free or not. Okay, and the seller has to raise a tax invoice in any case, because he is making a supply, and if that supply is a taxable supply, so he has to raise a tax invoice. So for general understanding how the VAT is calculated for or what is the revenue that is to be booked into the books of account, we'll give a practical example. The normal price, again, we'll take motor vehicle because that is something which normally everybody has purchased during their life. So let's say you buy a Honda for 105,000. During a promotional period, it is advertised as being 100,000 VAT free. So the consideration for the supply, what the customer is going to pay is 100,000. The discount being offered by the seller is 5,000. Regardless of the wording being used, the seller is required to account for the transaction as follows. VAT calculation has to be made. So 100,000, simple formula is 100,000 divided by 21 gives you the amount of the essential, the inherent VAT within the transaction. So this VAT will be, which is 4,761.9 in this case, will be accounted for by the seller, and the seller will book his revenue as 95,238. So even though that the customer is paying 100,000, 95,000 out of it is the government's part, is the seller's part, and 4,700 has to be paid to the government by the seller. Okay, so in summary, VAT registered business should not advertise taxable goods as VAT free, and the registered businesses should not sell taxable goods without accounting for VAT, the 5% VAT. So just as a note, except where the suppliers are zero rate, that is. Okay, Ji. So I hope this.
Thank you, Mr. Arif. Thank you, Mr. Arif, for your valuable explanation on VAT-free special offers issued by the Federal Taxation Authority. Again, I will add up here, there is no amendment in the existing law. This is a clarification issued for the clarity purposes to the public, as so many businesses in United Arab Emirates were giving VAT-free special offers. VAT-free special offer means there is no VAT being charged. So it was and
to the customer.
To the customer, and this was a misleading statement.
Yeah.
VAT is implemented in United Arab Emirates with effect from 1st January 2018. So every businesses were supposed to account for VAT 5% on of his services. So how they can introduce, means how they can let's say induce the public to come and buy more and more. They can announce VAT on us, as Mr. Arif explained. The customer can get the benefit and the supplier can give the benefit to the customer. They cannot cheat with the FTA. They can give the discount from their own side, but they cannot hide the VAT. VAT must be implemented. VAT is must applicable on all of their services or goods, but they can give discount on this sales invoice, tax invoice to the customer from their own side. And the treatment, they were very explanatory explained by Mr. Arif. I hope there is no questions coming on this. Thank you, Mr. Arif, for your valuable explanation of public clarification VAT-free offers.
Okay.
Now I will move to Mr. Ali. Mr. Ali is a fellow member of the Institute of Cost and Management Accountants of Pakistan. He is serving this community from a couple of years as a taxation consultant. So he will explain us zero rating certain exported services. Zero rating certain exported services. The house is with you, Mr. Ali.
Thank you, Mr. Malik. Thank you very much. Let me open my presentation. So this is again recent VAT public clarification. VAT public clarification number 19, zero rating certain export rate services. So first, this public clarification provide a high level clarification of FTA's view of the zero rating condition in Article 31A.
We cannot see your slides, Mr. Ali.
So let me go again. Is it visible now?
No.
Let me open again. Just a minute.
I think Mr. Ali have a technical issue with his slides. So we can move to the next expert.
Now it's
okay,
visible?
it's okay. Yes, please press F5.
Okay.
Click and then press F5.
Okay.
It's okay.
So
you may start.
this is okay. So this public public clarification is a high level public clarification regarding the zero rating of certain services. So this is defined in the Article 31(1)(a) of executive regulations, and this is not any change in the regulation, only just as per disclaimer. This is only the clarification. So what is the zero rating? Zero rating exported services. The supply only be the zero rating where the recipient of services does not have a place of residence in the implementing state. Is outside the UAE at the time the services are performed. So there are two conditions. One is the supplies should be made outside the implementing state, and other condition is in determining whether these conditions are met, the supplier must consider all available factors in order to identify the residency status and the location of the recipient. Where the recipient has multiple establishment, the supplier must also determine which establishment of the recipient is most closely with the related supplies. And second condition is the temporary presence of that recipient of the services should not be within the UAE. But for implementing states, there is one clarification through the Degree Law 8 of 2017. It's like which state that the UAE only treat the implementing states which states which is subsequently treated the UAE as well as a implementing state. So UAE not accepting any other states as a implementing state. So it means that this clarification is only regarding and in concern with the UAE. So place of residence have a two condition. One is a place of establishment and other is a fixed establishment. A place of establishment means a place where the recipient of service legally established to pursue the significant decisions and management controls over there. Fixed establishment means where the fixed business premises is there and sufficient human resources and technology available for conducting the business. So these two conditions should be met for the resident place of the establishment for the determination of the placement of establishment. In some cases, the supply of service may be made by the supplier may be received to some degree by both the places of establishment and the fixed establishment. In such case, the supplier will need to identify which establishment is most closely related to receiving the supply by considering the fact of each case objectively. The following factors should be taken into consideration. Means like where it's difficult to determine. So the following factors should be considered by determining the place of residence. Which establishment is a contractually recipient of the supplies? Number two, which establishment is actually benefiting the supplies? Which establishment will receive the invoice and make payment for the supplies? And which establishment provide instruction to the supplier? And whether the services are related to the business being carried on by the recipient through an establishment in a particular country. So these five factors should be considered where it's difficult to identify the place of establishment is difficult. The second condition of zero rating services, the recipient of service should out of UAE while performing the service. So this is second condition which should be met to avail the zero rating services. And only the physical presence of the recipient during the period in which the supplier performs services and recipient consume them need to be considered. The location of the recipient before or after the services are performed and consumed should not be considered for the purpose of this condition. So there's some examples for this. So just for more clarity, a law firm provides services to the Pakistani client to pursue the court case in the UAE, and Pakistani client representative is present in the UAE as a witness and appear in the UAE court. Then Pakistani client is not satisfying the second condition. Means like his presence is there in the UAE, So he will not be eligible for getting the zero rating services. Second example, a UK individual's client hired the services of UAE management company for investment due diligence. He visit UAE for family trip and does not visit the management consultant office, and then UK client is satisfying the second condition. Means like his visits not relation with the course of services. Although he is present in the UAE, but the visit is not. But for this condition, the management company who is providing the services from the UAE should have a reasonable proof that the owner of the means like individuals have not visited the service providing company. Company having a business in a multiple locations means like what will be the treatment for the company having a business in the multiple locations. So company having a business in the multiple locations, including the UAE, UK, Pakistan. This is also a simple example. UAE, UK, Pakistan, and having physical offices in all above countries. Company A hired an IT services from a UAE-based IT firm for its UK office. In this case, place of establishment would be considered UK, because the company A is getting services for head office. If the same services company A acquire for their branch in UAE, then it will not satisfying the condition of its present of its place of establishment, because the place of branch is placed in the UAE. So then it will be charged as a normal standard VAT. So this is the end from my side.
Thank you, Mr. Ali, for giving the beautiful presentation of certain exported services. Means certain exported services, Mr. Ali was explaining. Mean if some services are exported from UAE, we need to clear first the place of establishment. The place of establishment is in UAE or no, or there are multiple companies. I mean, one multinational company have establishment in several countries. So we need to determine which establishment we are dealing it. This establishment have a link with UAE or no. Then Mr. Ali explained that the law firm is providing services to Pakistani client. If the Pakistani client is coming to UAE and meeting the consultant and discussing his case and he's appearing in the court, then this service, he is not coming in zero rated services. He will be coming under 5% VAT as a standard service. If the same Pakistani client is coming to UAE as a family visit and he is not dealing with his law firm and he's not going to court for pursuant of his case, then he is coming under certain export services which will be treated as a zero rating. Thank you, Mr. Ali, for explaining this beautiful presentation. We have no more questions. Looking to the time limits, we will move to Mr. Nasser. Mr. Nasser is a fellow member of Institute of Chartered Accountants of Pakistan. He's a partner at Ben's Chartered Accountancy firm. He will give us his explanation on the public clarification time frame for recovering of input tax. Mr. Ali, you can close your presentation.
Yeah,
so Mr. Nasser will come. Stop sharing.
Thank you, Mr. Malik, again for inviting me. I'll just try to share my screen after Mr. Ali, and then we'll continue.
Mr. Ali, please stop sharing.
Yeah, just a minute. I am stopping.
Yes, thank you very much.
Thank you, Mr. Ali.
Mr. Nasser, please explain us the time frame for recovering of input tax.
Okay, so the law, there is certain conditions in the law for recovery of the input tax. And for first of all, the law says that as and when you receive a tax invoice and you make the intention to make the payment within 6 months of the receipt of the invoice or the supply made, only then you can claim the input tax. If, for example, the invoice is received and there is no intention to make payment, either within 6 months or after 6 months, then that input tax cannot be claimed. Or the invoice is received, however, the intention to make the payment is made after maybe 1 month, 2 months. Only then, at that time, when the intention is made, only then the input tax can be claimed. So both these conditions should meet to claim the input tax. Any one which is missing, then this input tax cannot be claimed and should be deferred till both these conditions are met. Giving an example of this, for example, company ABC has quarterly returns and they made a purchase on 15th of January 2020. However, the supplier did not send them an invoice and the invoice is received on 25th of July 2020. Since then, the first quarter, which is Jan, Feb, and March, that has passed, and then the second quarter, which is April, May, and June, that has also passed. So 2 quarters have passed, but they didn't receive the invoice. They received the invoice after lapse of 2 quarters, that is 25th of July. Now here the company has an option to claim this input tax in the period where July is falling, which is the third period in this scenario. Second condition, given the second example, same company, for example, the purchase is made on 15th of January, and they have, for example, they have some internal process of approving of invoices. So this approving, giving them invoices, passing on to the senior management for approval, and then to the finance for approval, and then this whole process took almost 3 months, and the invoice was approved on 5th of April for payment. Now, in this scenario, the second condition of making the intention of payment, it is met on 5th of April 2020, and hence both the conditions are met. So the first condition was met on 15th of January when the invoice was received, and second condition of making the intention of payment, that was met on 5th of April. Hence, this invoice and this input tax will be claimed in the return period in which April falls. So it will not be the first quarter, Jan, Feb, March. However, it will be the second quarter, which will be April, March, and May, and June. Another example here will be the company, the same company, purchase was made on 15th of January, same input VAT has been claimed in the same quarter. They had an intention of, at that time, they had an intention of making the payment on 15th January, and they did receive the invoice on 15th of January as well. However, certain conditions after they received the invoice, certain conditions happened. For example, last year we had COVID, and due to the cash flow problems, they could not make the payment till 25th of June. Now, what happened is that more than 6 months have lapsed since the conditions were met. Now, the law says that you should reverse the input tax which you claimed on this invoice, which was on the first quarter, 15th of January. However, the law also says that if in the future, whenever, maybe after 5 months, 6 months, maybe after 1 year, you do make the payment of this invoice, at that time, you can again claim this input tax and make your cost zero. This should not be a cost to the business. So once this is reversed, it will remain as kind of pending thing for you. So once the company makes the payment after whatever period, then again, this input tax can be claimed. So, Mr. Malik, this is all from my side.
Thank you, Mr. Nasser, for your valuable explanation on the public clarification time frame for recovery of input tax. Mr. Nasser was explaining that if you have received an invoice and you have not made the payment within 6 months, or you don't have intention to make the payment within 6 months, you cannot claim an input VAT. If you have received the VAT in first quarter and you are making the payment of 6 months, so you can make the treatment of your input in the next quarter and after the next 6 months. So if you have taken the input or you have not made the payment, you have to reverse this. You can claim it back again when you have made the payment. So thank you,
That's
Mr.
correct.
Nasir, for your valuable feedback. Now we will move to the audience public for their questions. There are some questions relevant to you, Mr. Nasir. So I will start from you.
Sure.
First question. At this level, do mobile connections provided to employees paid by the company, whether input tax is claimed on such payments? I will just add up more to this question because the questioner is saying the mobile is still an employee name. Okay, we will make two questions from here. If the mobile is an employee name and the company is making the payment, and the second question will be if the mobile is on company name and company is making the payment. Can you please explain on this? Means what will be the solution? What will be the treatment?
Okay, here the conditions for input tax claim is that whatever tax is being claimed, that should have been used for making the company's taxable supplies and the business relevant to the business. So if the mobile phone is 100% used for the business purposes, and the employee is not making any personal call, any personal use out of those mobile calls, or maybe using the internet or SMS or whatever, if they are not using any of it for the personal benefit, and this, the company can prove to FTA that yes, we can prove that there no personal use has been made on this mobile connection, then the input VAT is claimable. However, if it is available for personal use, they can use it for business as well as personal calls. They can use it for business SMS as well as personal SMS. Then this condition of VAT of the law, which says that anything which is available for personal use, it should not be the VAT, input VAT on that should not be claimed. So then this condition will not be met, and the input VAT cannot be claimed. So the two conditions are that no, it should be used for business wholly, and it can be proved to FTA that no personal use has been made.
Thank you, Mr. Nasser. There are some questions. I hope I will answer them. If anything is required, I will refer to the relevant expert on this. They are saying that please brief introduction about VAT as employer asked it. Oh, very nice. This is actually not relevant to this public clarification. I mean, VAT as employer asked it. So I will simply reply, VAT is a consumption charge which is applied on all services or supplies made in the UAE and paid by the end user. This is a simple answer for this. Another question, can we claim input VAT under voluntary registration, or it will be claimed once we have mandatory registration done? See, in both cases, you can claim input VAT. If it is a voluntarily or it's a mandatory, you are a registered person, you have received TR number from the FTA, you can claim all your eligible VAT inputs. Another question is, can you give an example out of scope services in healthcare? There are no out of scope in healthcare services. Out of scope services which are performed out of UAE, which are not performed within UAE, they are out of services. Anything performed in the UAE, it should be either exempt, it should be standard, or it will be zero rated. Another question is, earlier my company was part of a group and I have issued a tax invoice, but after some time we have registered as an individual. So can I issue a credit note against the invoice issued under old TRN? There is a certain procedures. There are certain procedures for a group company and an individual company, and again from group to individual there are certain procedures. For each procedures you have a certain time frame for submission of your VAT return. If you have issued as an invoice in the group, so it means it was adjusted in the time frame given by the FTA to submit your VAT return. That was your final VAT return, and then your group was broken and the companies were converted into individual companies. Same from individual, if you are making a group company, so FTA will give you some transitional time to submit your final VAT return. Then after the group registration, everything will belong to the group. Mr. Nasser, I will give you this question. We have construction projects in KSA. We have construction projects in KSA. Our scope of work is design, providing and installing cladding material. If material cost is 15%, design 40%, The 40% installation services. At custom, we issue invoice only 25%. We clarify, we client certify 100% and pay 100%. How we can show this in VAT return file?
Can you
So
please repeat the question so
what
I
I
can get
assume
the
here,
figures right again?
yeah, I will just clarify this question and then you can answer it. I mean, there are two activities performed in this one. One is supply, which is 25%, and 75% was service. So as a client, they are saying we have paid 100%. So how they will treat it in VAT return? I mean, 25% is the material supply, which is supply, and 75% is service.
So, Mr. Malik, this is a general case of export of products and export of services. So, export of products through customs, it will again go as 0 rate, and on export of service, again it will go as 0 rate on the services side. So, this will be a general 0 rate, only that the invoice will be segregated into two parts. Like they have the commercial invoice for the export of goods, and the services that's obviously they'll directly send it to the client.
Thank you, Mr. Nasir. I mean, the question is answered by Mr. Nasir that 25% you will treat as a supply. The invoice will be different. It will be supported by the custom documents. 75% will be your service invoice, and the treatment of both is shown as a sales in your VAT return and the VAT on the both the sales. But for service invoice, you have to follow the condition which was given by Mr. Ali on export services. So it should not be out of these services. Okay. A new established LLC have received orders valuing to the mandatory threshold. Can he register with FTA before raising the invoices? I will ask again. A new established LLC have received orders, mean the company newly established as a LLC, and they have received some orders. So they need to register first and then issue the invoice, or they can issue the invoices without registration.
They have an option if they have confirmed purchase orders from their customers within for the next 30 days. Then the company does have an option to apply for registration, and FTA also does on these conditions. FTA does register the company, and they can register and then conduct their business.
Thank you, Mr. Arif. Another question, I hope I will answer this. Nightclubs in hotels. Nightclubs in hotels are leased entities working on the hotel license. How to account for their registration in VAT, and how their rent paid to the hotel will be treated under VAT, and how their sales will be treated under the VAT regime. First part of this question I will clarify. No one in the UAE can do a business without a trading license or a service license. You must need a trading or service license before doing any activity in the UAE. If the nightclubs are working on the hotel license, it means it's a division of the hotel. So all the sales and input will be treated in the hotel's main supply and inputs VAT, and it will be treated on that one. Another question is, hello, Mr. Arif, can you close your slides, Mr. Nasir? So I will move to Mr. Arif as well. Hello, I need to ask, if we are about to liquidate our company for FTA clearance, what steps should I take to get clearance from FTA? Because at FTA portal, I have seen re-registration, clearance certificate. Please note we have VAT receivable around 25K from the business. Mr. Arif, the question is, the company is going to liquidate. So they wanted to close everything, and as part of their liquidation, they wanted to close their registration. They have receivable VAT as 25,000 as well, and they want from FTA clearance. So what step they can take?
Look, first of all, they need to obtain the clearance certificate from wherever they are registered as, whether if it's DED or Free Zone or wherever, maybe Abu Dhabi. So they have to get a clearance certificate about from the relevant authority. They need to, if they have to liquidate, there might be a requirement for a liquidation audit to be conducted. So that is also necessary. And then they have to file a final return for VAT under the VAT law. And then within that return, they can apply for that VAT refund.
Thank you, Mr. Arif. There were questions going on. Is it mandatory to issue a tax credit for bad debts? Mr. Nasir, is it mandatory to issue a tax credit for bad debts? Tax credit note for bad debts?
Yes, Mr. Malik, this is this credit note. Not only it is necessary to be issued, but also it is to be sent to the client and informed to the client that this certain consideration has been written off. So yes, it is mandatory to be issued and communicated to the customer as well.
So not only it's a mandatory issue to credit note, it needs a confirmation from the client as well. Thank you, Mr. Nasir. How to incorporate discount received from supplier for VAT purposes? How to incorporate discount received from supplier for VAT purposes? Mr. Nasir.
Okay, so this discount received, obviously when the supplier will give you a discount, they will issue a credit note to you as well. Okay, so this will reduce your input tax in whichever period you have received that credit note, and you will reduce that your input tax as per that credit note from the supplier.
Another question is, VAT on us is a government contribution and VAT free is a seller contribution. See the question, Mr. Arif has explained very well on this. VAT free is a seller contribution, is not a seller contribution. VAT free is not allowed. VAT free is not allowed. I will again explain. VAT on us is a government contribution. VAT on us is not a government contribution. VAT on us, it means the supplier have to contribute it. The government have to receive the exact amount of VAT. The customer can get a benefit, but the supplier have to absorb the discount in his own invoice. With regard to issuing a credit note, instead of writing off following points merit consideration, by writing off, you are claiming a relief available in law. By issuing a credit note, you are reducing the output tax liability. Also, the credit given should be in line. Oh my God. So the person is asking the question is also confused from this one. See, if you are issuing the credit note, Mr. Nasir, I will just redraft this question for you. The person is saying, by writing off, you are claiming a relief in the law. By writing off the bad debt, definitely we are claiming getting a relief from the law. By issuing a tax, you are reducing the output tax liability. By issuing the credit note, you are reducing the output tax liability. Also, the credit given in line. Mean he is asking the question and he is answering by himself as well.
So I didn't get the question. Where was the question in here? So he gave a statement and then the same. He explained himself also. That
yes, he is answering. So we'll move to the next. Can we claim VAT on bank charges, commissions for buying properties and investments? Input tax. This was with you, Mr. Nasir, already.
Okay, so the first part, which is the tax, bank charges, the VAT on the bank charges. All the banks now in UAE, they issue a tax invoice every month and they send it to the relevant company or registrant. And if you have those invoices from the bank, from the company, and the bank account is in the company's name, and the bank has issued a tax invoice in the name of the company with the relevant tax invoice conditions. And if those conditions are met, yes, those can be claimed.
Thank you, Mr. Nasir. Another question. So services in KSA will be out of scope or zero rated in the file return. The services in KSA will be zero rated if they are performed from UAE, except they are not falling in the condition which is explained by Mr. Ali. If the client asks to change VAT number of old invoices which we already submitted to F2A, can we? See, there is only one VAT number, which is TRN number issued by the FDA, and it cannot be changed until any ambiguity will come. Seeking information about VAT return, late filing fines, and seeking information about VAT return, filing, fine, and penalties. You may approach to the complete tax laws, or you may contact one of our consultants who have mentioned their
Sure,
details
they
on
can
the website.
contact and we can give them a
On
clarification regarding
on
that.
their presentation, you can find them. You can even ask to ICMA, they will refer to everyone. Please check Dubai municipality law for leased outlets working under the hotel's license for 11 years. I was facing this problem. Oh, it means Dubai municipality have issued the license to the concerned person for doing this is outlet license issued by the Dubai municipality. Yes, you can register as a, if, see, there are so many establishments in the UAE which are issuing the trade licenses. Even the Chamber of Commerce Dubai is issuing the trade license. There are the Dubai municipality is also issuing, means this is like an outlet license working under the hotel license for 11 years. I was facing this problem. So definitely you have to register for VAT and then you can claim it as an entity. In VAT on us case, tax invoice will show VAT, client will claim the input. VAT on us case. Question is very simple, Mr. Nasir, for you. In VAT on us case, VAT on us case, tax invoice will show VAT. Client will claim the input. Of course, he will claim.
Of course, if they have the recipient of the product or services, they are registrant, they are registered for that, and they have the invoice copy from the supplier of this service or product. Yes, they will be definitely claiming. However, most of the times these things happen in retail businesses, like for example supermarkets and stuff. Most of the time it is on retail, and the services or the products are being offered to general public, and general public most of the times is not registered for VAT. So this most of the time this will not happen. However, if the recipient of the services or the products they are registered company and they have the invoice from the supplier, yes, they can claim.
Yeah,
Thank you,
and
Mr. Nasser.
if the invoice is in the name of the
Yes,
company.
Mr.
Yes. Yeah, exactly.
Mr. Arif, the last question for you. VAT on medical insurance for employees' dependents is recoverable?
We have already discussed this.
Yes. I mean, VAT on insurance of employees dependent is recoverable if the person is registered as a person. I mean, he is registered as a person, I mean, he has a TR number, then he can claim it. Any significant new clarification Jafza-based companies I think it's not relevant here. So thank you everybody, the experts. Now I will invite Mr. Intezar Rana, the Vice Chairman of UAE Branch Council, for his closing remarks, and we will end up this session. Mr. Intezar Rana. Mr. Intezar Rana for closing remarks of this webinar, and we will close the session. Mr. Intezar, the house is with you, please.
Thank you, Mr. Khalid. Actually, I was listening, and it was very wonderful session, especially all the speakers, all the trainers. They present in a way like a single minute I didn't go out of the session. Normally what happened, like the people listen something, some parts, and this session, total session was too much interesting session. It was really valuable for us. Here, like I want to add one thing. The Gulf, especially UAE, is the tax zone country, and we should, as a financial advisor, we should focus on the management consultants. Not all the time, like we should treat as a normal case, and then we should penalize to our employer with the penalty. So we should go to the consultant, like I just observed and understood today. Like there are so many amendments are coming, which we normally we are doing the normal course of business. So we should go to the expert, and we should really take the expertise to avoid the penalties. So this we should do. And again, this was very wonderful session, especially Mr. Arif and Mr. Nasser explained the things very well. Mr. Ali also, Mr. Rabia. So all experts, they really add the values, and I would thankful to the whole ICMA logistics support, team also, like who make this webinar, like the possible. And at the end, to Mr. Khalid, he really conducted a wonderful session. He was really good mediator. Normally he is giving the answer, but like he also explain himself like he's also a good expert. So all this one, I hope like everyone in this session who attended the session took some values, and like at this night they can use this all these suggestion, all these advices, and all this knowledge will add the value in their in their skills, in their professions. At the end, again, I will advise to all the members, like, must hire the consultants. This is very compulsory. Do not penalize your employer to do the things by wrongdoing, because in tax zone countries like Pakistan, India, everybody use the consultants. Here we didn't have the habit. So don't like try to make the wrong things, try to hire the consultants. So with this one, thank you so much everyone, and have a good night. Thank you.
Thank you, Mr. Nasser. Thank you, Mr. Rana. And very ICMAP, very thankful to ICMAP who have registered a legal branch in the United Arab Emirates in Ras Al Khaimah and given us a platform where legally we can do our webinars, seminars, and legal activities. The branch is registered in the same way like in ICMAP in Pakistan, the same way they can do the same business here. And we hope we will get more benefit from this branch. Thank you very much. And we are ending up this section. Mr. Shamsi.
Thank you so much, everyone.
Thank you
it
very
was
much.
a pleasure having
Thank you
you.
very much. It was a real pleasure.
Thank you. Thank you.